Good morning, publickers. I'm Sarah Evans, founder and CEO of Sevens PR. It's always important for me to acknowledge I am not an investing expert, but a passionate and voracious learner with a focus in the tech industry. Happy Friday for all of you listening in. Let's jump right in. After the market closes today, Amazon will complete a 20-for-1 stock split. In this session of Tech Check, we're breaking down the mechanics behind the stock split and what it means for investors. To help us do that, we have financial expert and investing content creator, Austin Hankwitz. Austin, thank you so much for joining us today.
Hey everyone, how's it going? My name is Austin Hankwitz and I spend most of my time creating personal finance and investing content online, mainly short form videos. You might see me on TikTok or YouTube or one of those places. These videos are generally explainer videos, giving me the chance to break down big, complex topics into smaller, bite-sized pieces. So in this walkthrough session, as Sarah alluded to, right, we're going to be discussing Amazon's 20-for-1 stock split, specifically the mechanics behind it and what it means for investors.
And Austin, thank you so much for all you do, especially for people like me who want to become more educated investors. It is much appreciated. So I want to start today with the basics of what is happening with Amazon's shares and how that impacts shareholders. Can you break that down for us?
Yeah, absolutely. We're gonna let's dive into it, right? So what is a stock split? It's essentially exactly what it sounds like, right? A stock is splitting into more shares. And in this instance, if you had one share of Amazon, that one share is now splitting into 20, hence the name of this 20-for-1 stock split. And so now you're probably saying like, listen, I'm confused. Why do I need 20 shares of Amazon stock? What was wrong with my single share of Amazon stock? And the short answer to that question is liquidity, right? So if you look at Amazon's stock price, you're probably saying, whoa, $2,500 a share, that's a lot of money. And you'd be entirely correct. Now, without getting like too technical into how all this stuff works behind the scenes, thinking about what goes into selling a share of Amazon stock. To us retail investors, it's pretty easy. We just click the sell button inside our public app and boom, the stock is sold, right? But for folks who have maybe thousands of shares of Amazon stock or even tens of thousands of shares, it's a lot harder. You have to find a buyer. It's not just any buyer. It's someone who can, pay cash for those shares at a price at a price as close to its current price today on the market. And I guess what I'm trying to get at here is by doing a stock split and transforming the price of Amazon stock from about $2,500 a share, which is out of my everyday budget, to only $125 a share, the amount of money that can be moved around between buyers and sellers increases exponentially. So at $2,500 a share, there's only so many people, mainly those institutions, right? The hedge funds, the suits on Wall Street, that could buy whole shares of Amazon in bulk from people selling them. So for folks selling, it was really slim pickings as to who could buy their shares. But now at $125 a share, nearly anyone could buy them in these whole pieces, including you and I. So liquidity is the main reason companies undergo stock splits. But remember, despite the number of total shares outstanding increasing by this specific multiple of 20, the total dollar value of all these shares remain the same because a stock split does not fundamentally change the company's value. So if you have one share of Amazon stock at $2,500 a share, and you fast forward to after the split takes place, you now have 20 shares of Amazon stock at 125 share, or the same $2,500 value if you add them all right. I'll add them all up, right? So nothing changes about your total investment or the fundamental intrinsic value of the company.
Ooh, thanks for breaking that down. And I like anytime something is more accessible to us regular folks and investors. If they don't change the value of the stock, and if we can invest in fractional shares, why are companies motivated to do them? And why is there a flurry of investor activity around them? Is it purely psychological?
That's a really good question. And I mean, from my perspective, right, like, does it really matter now with the rise of fractional investing? I'd say not really, right? But, from the perspective of added liquidity, sure, that's cool. But, for you and I, well, I guess I won't speak for you, but for me specifically, like, I'm just going to continue to dollar cost average into Amazon stock anyway, right? The split doesn't change anything about my investing strategy or any reason why I would or would not invest in the company. If you think about it, stock price movements are calculated in percentages, right? So if you own 10 shares of Amazon stock right after that split and the stock went up 10%, you're still up 10% on your money. Just like if you owned zero point 0.5 shares of Amazon stock before the split, which is a fractional investment, right? Half of one share. 10% is 10% no matter how you slice it. And so now the fun part for retail investors is this insane movement in stock price we've seen after a stock split is announced. As you guys, I'm sure, remember over the last couple of years, we've seen Apple, Tesla, and Nvidia all announce and do stock splits. And the average share price increases for Apple, Tesla, and Nvidia 6 months after their splits were announced was up to some 60%. It was crazy. But remember, like, there's no reason for this, right? It's all just hype. And so if you own Amazon stock, or you want to own Amazon stock, or you don't want to own Amazon stock, you should be doing it for the reasons, the fundamental reasons behind the company, if that's AWS, their advertising business, whatever, right? Not because you want to try and time the market and cash in on some potential run up in price, specifically during this unpredictable bear market we're currently in, right? There's so much going on behind the scenes with the markets. The last thing I'm trying to do is time a stock split.
Austin, I feel like I spend a lot of time dumbing everything down for myself, and I just put on my investing blinders. That's what I always call them. So I'm not influenced by some of these outside things that are happening. I know it's really hard to do. You gave the example of Tesla and their competitors. Is there any other historical context around how stock splits may or may not impact performance?
That's a really good question, and I don't exactly see that. Sorry if you hear a beeping noise. I'm not sure what that is. I was going to say, but I think what's specifically interesting to think about are the record dates, right? And with that being said, if you think about owning a share of Amazon stock, what's very focused on that is these record dates, and what this is it's a date when someone goes around. It's this big day, right? Someone goes around and is trying to find these specific amounts of shares that every investor has. So they want to know exactly how many shares you're entitled to after the split is completely finished, and we're trading at this split adjusted price on exchanges. And so if you think about historicals, right? If you look all the way back to to Apple or Tesla or Nvidia, they all had these record dates. Same thing with MasterCard or any other stock that has split over the last however many years, right? And so if you're a shareholder, as of the market close on the record date, you are entitled to receive these additional shares. So in Amazon's case, this is May 27, right? This is just a couple days ago. So if you're holding shares of Amazon into this day of May 27, there's a bookkeeper that goes around and says, hey, Austin's got shares of Amazon. We're going to make sure he gets his 20 shares after the distribution date, which is something we're about to talk about, right? But, again, this record date of May 27 and this distribution day, which is today, June 3rd. So if I'm owning shares on May 27, this bookkeeper says, hey, Austin's got these shares. We'll be sure to give him these extra 19 shares. So this 20 for one, right? I already own one plus 19 is 20. He'll have 20 total shares on the distribution date. Thumbs up there. But if we think about like the nuances about this, and I mean, you all know, like, people buy and sell stock every single day. So what happens between this May 27th day and this distribution day of June 3rd? What happens if I buy Amazon stock on, maybe June 2nd, or if I sell my Amazon stock on June 1st? It's between these two really important days. What's going on there? So if you sold your stock after the record date, you're not entitled to any of the additional shares when the stock officially splits on this distribution date, right? So if I sold my stock yesterday, or call it, May 31st, right? Or sold my stocks on June 1st, I would not be entitled to these additional 20 shares because I don't really own Amazon stock anymore, right? But now you think about, what if you bought the shares after the record date? What if I bought a bunch of shares 2 days ago and it was after the time this bookkeeper went around and to confirm that I had shares, which at the time I did not, but now going into the distribution day, I do. So if you bought shares after the record date and before the distribution date, you'll still get the additional shares, but it won't be exactly as seamless as possible. You'll receive something called a due bill, which it's going to happen like behind the scenes, so it's not going to be something mailed to your house or anything. But these due bills settle a few trading days after the distribution date, and what they essentially do is just make sure you get your shares, right? It's kind of like an IOU. You might recognize the name if you're a big dividend-focused investor, because they use them when paying pending dividend payments from investor to investor. So thinking about way back to historicals with Apple and Tesla and Nvidia and all these other different companies, we did see stock prices move very. There's a lot of volatility with stock splits, but I think what's most important is to think about obviously the long term and how to be prepared for these recording dates, these distribution dates, and making sure that you're coming from a place of authority and education versus just kind of like, okay, what's going on here? Which is obviously why Sarah and I are here to help you.
Austin, I don't know what it would take to keep you on speed dial so I can get this info every day, but I am willing to invest in you.
I love it. I appreciate that.
For everyone listening, this has been exceptional advice. And Austin, we don't take it lightly that you spend time to help educate all of our listeners. Where can people find you online? And this is a great opportunity to also pitch your newsletter, which is a great investment.
Oh, yeah. Thanks so much. Sure. So if you go to austinhankwitz.substack.com, I have a newsletter. I normally post between 2 or 3 times a week. Every Monday, I send something out called the Week Ahead, which is everything investors should expect that week. If it's earnings reports or investor relations presentations or different conferences or economic changes that we're seeing, that comes out every Monday. So you have all the educational resources you need to attack the investing week ahead. And then for my paying subscribers on Sundays, I do a quick breakdown of all the things that happened that week. So if it is an earnings release, I walk through what was good and what's bad. Or if it was a conference, I share the juicy details, right? So that's where I'm placed at a lot, right? My Substack. And I think that should be in the link in my bio on my public account. If you're on TikTok, just look me up there too. Share some videos over there, but you can also find me here in public, right? I post all the time here, and I'm really fortunate that you guys are following me or willing to consider it. So thanks so much, Sarah.
Thank you. I hope everyone listening, you have a safe, happy, and healthy weekend, and we'll see you back next week, same time, same space on Tech Check. Thanks to all.
If you would like to see more content like this, subscribe to our channel and download the public app where you can listen to these sessions in live time.